All right, what's up, everyone? Today we're gonna go over the how to flip an account. I've had some success flipping accounts in the past. I had help from some of my mentors. Kind of like I always really, for a good period of time, I knew how to trade. I knew what to look for. I knew how to, I knew how to call out signals to make money, but I wasn't consistent in my profits. So I was confused what I was doing wrong. So I asked Ray, I asked Gustavo, I talked to Darwin, and what this is just an example of something you can do. Understand this: you deposit $500 just as an example. Let's say this: trade one, risk 100 to 200, and then earn 400. This is just an example, right? So say for example, you have a 10 to 20 pip stop loss with one standard lot, right? That's $100 or $200 risk. If your take profit is like, say like you have a TP1, TP2, let's just say estimate you make $400, $600 on that. So that's a way for right there, right off the bat, off the beginning of the first trade, you've already done 500 to 1,000. So trade two, now you're at 1,000. What you could do, risk 200 to 300, or just as an example, 800 to 1,000. So you're taking these good risk reward trades. You guys understand how the mathematics works. Let's just say, for example, you take a loss. You take a loss, boom, you're already right there, and you still have more than what you started with. Say you just lost that one somehow, like which rarely happens when you're trading off this confirmation. And then the next trade, you do the same thing. This is just an example. And right? No, next trade, boom, you're at 1,500 already. You can be done. Withdraw 1,000, start next week with 500 again. Like that's an example of how you can go 500 to 1,500 in 3 trades. In 3 trades. And that's with losing one. That's if you lose one as well. If you go 2 for 3, you can go 500 to 1,500 like that. And understand this. So a lot of you had smaller accounts. So let's just say this for the $100. And understand, it would be better for you guys to practice this on demo and focus on getting P600. And then that way, once you get P600, you have money to put in that you don't have to worry about risking. Because guys, if you have like a small amount of money to put in and that's all you have to put in, like you have to understand, like trading with that is not smart. If you have say $50, $100 left after everything else, and that's it. Like if you're gonna trade that $50, you gotta be okay with whatever happens to that. You can't trade thinking about what if I lose it, because that's going to attract losses. And you don't want to attract losses. You got to understand that you got to have the confidence and understanding that you are in control of the market. The market is not in control of you, because you can sit there and wait for your setup. There's no rule you have to enter on a signal. There's no rule that you have to enter just because you get your confirmation. If you get a feeling that you should enter, then enter. If you don't, then don't. If you enter deep on a trade and you have a feeling you should close it early and take the small loss. So this is an example, $100 account. Okay. Trade one. And remember, you guys understand smart money now to a certain extent. You know what zone you're looking to enter. And a lot of times you guys probably see, you guys have the same exact markup as I do. You have the same markup as Kyle. You have the same markup as Gustavo, Abel. If we have the same exact markup, like that's your confirmation for that to be one of your 3 trades. If you take 3 trades in the week, you can double your triple your account like very easily. You just got to be able to mentally comprehend that and not emotionally react to what happens in your account. Because the thing is, if you can do 50 to 100, you can do 500 to 1,000. And if you can do 50 to 100 and 500 to 1,000, you can do 5,000 to 10,000. It's the same thing. So trade one, I would recommend once you have 500 to trade with, I would recommend you trade with 100 instead. And for example, what I would do with 100 is I would risk 50 to 60 on the first trade. And with that, I'll make sure it's a really good setup. Not even that, but the entry is more important. When you're trying to flip an account, your entry is the most important thing. So you catch a perfect entry. Let's just say, for example, it goes 10 to 15 pips in profit. At that point, so if you risk $50 to $60, let's just say, for example, you dropped a point 25 with a 20 pip stop loss. A point 25 on a $100 account, right? You go 10 to 15 pips in profit. Right off the bat, your 100 is to 125. So at that point, take partial, move stop loss. Simple as that. So say you let that ride. Maybe after the first trade, you end up at maybe a 140, for example. That's just being conservative. So then at this point, next trade, if you're being particular about your trades, like I am, trade two, you're risking, and this is however you want to do this for you. Like for me, I'll actually risk way more than what I'm saying. I'm just saying for you guys, you might want to give yourself some room for error. So say it's at 140, I would risk typically, like say for example, if you have 100, you make 50, your next trade you should risk 40. So risk let's just say 40 to 50. I always get a little bit more conservative later in the week because you don't want to risk what you've already made. You know what I'm saying? Like if you've already doubled your account, there's no reason to risk your whole account. You can take a loss and you still are in profit. So why would you risk your whole account? Trade two, 140, risk 40, 50 for let's just say 100. So say example, this hits your TPs, now you're at 240. Okay, now at that point, you've already 2.5 your account. So your next trade, you're not going to sit there. Of course, there's certain times which you guys will start to understand that there's certain setups you're going to want to go all in on, especially with a small account. So say example, this next trade, I'm like 100% sure on. It's going to go instant profit. I'm gonna sit there and I'm going to risk 150 on that trade. And the reward is say 400. This is an example. Boom. Already at 600. Withdraw 400, start next week with 200. Does that make sense to everyone? Does anyone have any questions with that? And I can tell you, once you have more money to play around with, you can be a lot more aggressive. Because say, for example, right now I deposit 500, I go full margin. Say I lose. At that point, I can just deposit 500 more because I know I'm going to win the next trade and triple my account. So does that make sense? So once you have money to play with like that, you got to understand, like with smart money concepts, you're probably not going to lose 2 in a row. Like you're probably not going to lose anyway, unless it's like a small stop loss and you can re-enter because the zones are valid. So say $500 account, trade one, it's the perfect trade. I'm going to sit there and risk 400. If it's a perfect trade, I'm going full margin. And then what's going to happen there? Maybe I close early, only take profit 1. I make, let's just say conservatively, make 500. So at that point, next trade, risk slightly less than what you just made. So if you just made 500, risk 400. Boom. So let's say, for example, you lose that trade, then you're at 600. If you win, you're at 1800. You see what I'm saying? Both of those numbers are bigger than 500. Does that make sense? So if you win that second trade, you win your first 2. At that point, you're already at 1800. So at this point, there's no reason to risk that much. So at this point, I would risk maybe 500. Trade 3, risk like say 500, because that way if you lose, you still doubled your account. But if you win, which you probably will, now next thing you know, you're at 3K already. And that's what I did that one week. I risked my whole account in the first trade. I risked my whole account in the second trade as well. But if you catch a break even, so say now you're at 3K. So 500 to 3K, at that point, you can probably just be done for the week and withdraw. But if you want to keep trading after that, like I said, I recommend only doing like 3-4 trades at the most when you do this. Trade 4, I would risk literally probably the same thing, 500. Because say you lose, you're still at 2,500, and if you win, you're equal to 3,500 already, or to 4,000. Like at that point. So when you're taking these risk reward setups that are accurate, you got to understand like how fast they can compound, and it's going to happen by you being patient and waiting on the perfect trades. It's not going to happen by you entering every trade you see. It's going to be like, okay, is this a perfect trade? No. Okay, I'm going to sit back. Bro, you guys understand? You could wait till Wednesday to enter a trade and you could still triple your account. Like if you wait till Wednesday and then at Wednesday you get your perfect setup, everything you're looking for, you enter, it goes 20 pips in profit instantly. You doubled your account and holding a partial profit for the next entry. Yeah, exactly. So let's say a couple you said even smaller than that. So let's just take a picture of this. Actually, it's recorded. It's recorded, but I'm actually gonna save it. I think you can save. All right, save the screen. I'm gonna clear this off. I'll share that later. So let's just say, for example, we're working with smaller numbers because this is interesting. With smaller numbers, I recommend you pretty much risk the whole account in the first trade. That's what I recommend. So say it's a $50 account. First trade, do a 0.10 with 10 to 20 pips stop loss. That's what I would recommend. TP1 would be like a 0.06 plus 20 pips. So that would be $12. And let's just say TP2, you have the other 0.04 plus 50 pips or break even. So first trade, like I said, when you're entering off this, TP1 always gets hit every time. Like in my experience, it gets hit 19 out of 20 times when you're entering off a perfect entry in your zone. So worst case scenario, you're at 60 on the first trade. And then if it hits your final target, you're going to be at 80 off your first trade. And like I said, pretty much your rule of thumb is if you want to risk what you just made, I wouldn't risk more than what you just made unless you're really sure about the trade. And that's something that's going to come with experience. Like if I get a perfect setup, I don't care what's in my account. I'm gonna risk almost the whole account. The only scenario I'm not is if say for example, you start with 50 and then 3 trades later, you're at like say 250. At that point, I would only risk like 50 to 100 at the most. But understand your risk reward. Let's just say trade 2, you're at $70. At that point, I would do a 0.15, 0.10 TP1, 0.05 TP2. And this is you can only do this when you catch a tight stop loss. Don't be doing this. Don't be doing a flip account entry on a big stop loss. It's not going to work out for you. But unless you, of course, go instant profit and you win. Note takers on money losers. So, but you got to understand if you're with a small account, you got to be aggressive. So you could even risk more than that if you wanted to. You could even do a 0.20. I would go if you get your setup full margin. Like if you haven't doubled your account yet in the week, you can full margin any trade that you see that you feel is worthy of that. But certain things you'll learn with experience, like you enter, it doesn't go into profit, it plays around, you might want to scale out, stuff like that. Let's just say trade 3, you're at 100. Like I said, your first trade and your first 2 trades should be perfect setups. They should not be. You shouldn't be risking much. You should be like so patient. The fact that you know for sure it's going to win. There's no reason to enter 10 trades. It makes no sense. What Darwin told me to do was he actually told me to take 1 trade per week. He said do a $500 account, drop a standard, and then if it goes in drawdown, keep stacking. That's what he said to do. And that's what he does. Except, that's what he said he does. Ray, at one point, told me back, it was a while ago, it was almost a year ago, but he said he did $500, and and then he'll sit there and risk like 20, 30%, 10, 15, 20% on a trade. And then, you know, either double or triple that, it would be the goal, and then withdraw it back to 500. So like, you got to look at trading as you're paying yourself. You're not just trading to compound your money like a bank account. Like, that's very hard to do, because what happens is, it happened to me when I started trading. I would go 2-month period of time being consistently profitable, and then I would have one day where I did some dumb things, and then I would wipe the profit from the full 2 months. When if I would have withdrawn over the 2 months, that wouldn't have happened. And if I'm starting with a small account each week, there's not really much to risk. You know what I'm saying? If you have, like, people always ask, what should I start my account with? And I'm telling you, I don't care if you have 1,000 to invest. I don't care if you have 10,000 to invest. You should be having a few hundred in your account. That's it. Like, there's no reason to have more than that. Unless you have 10, 20, 30 racks to invest, there's no reason for you to have 1,000 in your account. It does not make any sense. That's too much risk, especially for a beginner. If you have 2,000 to your name and 1,000 of that is in your trading account, that's way too much. Like, at the very maximum, I would say 10% of your money should be in your trading account. That's the way I look at it, because you got to understand what you're risking at the end of the day. Let's flip some shit. Like, just be patient and don't be like. So a lot of the times, no trade is the best trade. No trade is the best trade a lot of the times. I would rather take 0 trades one week just for the next week have a perfect setup and then quadruple my account. Because you gotta look at this. You don't have to trade every single day. Let's flip some shit. Like guys, we have some obvious markups right now. I'll go over some of them. These are the type of trades we're going to take with the flip account. Okay. Oh wow, you just said that at the perfect time, like, as I just said that. That's crazy. The synchronicities. The number one setup of the week I see is USD CAD for sure. I think it's gonna be interesting to see where gold and a US 30 open up. I would say any chance you get to buy gold, buy the fuck out of that shit, because it's literally, I feel like it's gonna break the high by a lot. Because I'm gonna show you guys something. The reason why I think it's gonna destroy the high is, I'll show you this right now. Thing is, history repeats itself. So check this out. We're gonna look at the last couple times that it closed with an engulfing at the highs on the daily. So this candle right here. We had this candle right here. Both of those looks kind of familiar to this right here, huh? Right? And look where they happen. Around the high over here, not quite the exact high. Let's say this high though. It closed above that high. This one right here closed right next to this high. And then this one right here closed right next to this high. So the last couple times that happened, including that engulfing candle, say above the high, this one, before really having any type of pullback, broke. Oh God. All right, this one was 1,000 pips. This one right here was 900 pips. Right? Okay, this one actually pulled back. Let me see an example. Okay, yeah. So perfect example again. That high, and then this engulfing candle that happened right at the high. What happened? 500 pips. So at this point, we're seeing this over and over and over again. So I'm expecting 15, 60 this week. Just based off that same logic. If you count even if you count from down here, like you could, who knows where this is going? Like this is about to destroy it. No, what I'm saying is, at this point, if you're not in, you can't really enter unless it's like a 0.01. That's it. All right, there you go. We're good. All right, I haven't had a problem there. But like I was saying, so at this point, here's a couple of things are going to happen. One of a couple of things could happen with gold. It could gap down to like maybe here. If it gaps down, what you got to look for is wait. Because usually when it gaps down, it continues. So wait for it to gap down and then make like some type of double bottom, and then that would be your buy. It's probably going to gap down. If it gaps up, that shit is gone. If it gaps up somehow, it's gone. Like, just know that. But if it gaps down, it's got to be patient. But, of course, you could just buy it. But, like, I'll tell you guys, for example, what happened to me a few weeks ago. A few weeks ago, this happened to me. Yep. So I had entered gold buys in this area, and price closed around right here. So I was up about 50 pips when the market closed, and this shit gapped down literally. It gapped down about 200 pips. And then what happened was, let's look for points of interest, because this is what happened last time when it gapped. So, okay, you can't really tell, but this candle right here did not happen. That whole thing was the gap. Price actually opened up right here. So, and what happened was it came down straight to this wick. And look to the left where that wick was. It was that exact pivot point, right? So don't just automatically enter right when it opens, because it can keep going. But say if it goes down and then it comes back, gives you a double bottom, that's where you could enter. And then of course it comes back in again, hits your break even, re-enter, whatever. But like at this point, let's see like if there's anything they could come back to now at this point, right? I mean, we got this wick right here, possibly. We got this whole area right here. So I would expect it to come down to somewhere in there. And shit, if it goes any lower than that, I would just go ahead and buy. If it goes lower than 15, 17, I'm just gonna just buy. I don't care, like, at that point. But that would be pretty much the area I would be looking for. But gold, there's not really anything I would take on the flip account with gold right now. Only scenario is if it tanks really hard and makes a long wick. I would probably take that. That's about it. But USD CAD is definitely the cleanest trade of the week right now. You got those major equal highs right there, and then you look to the left. We got this area right here. Basically, anywhere where you see price accumulating could be considered a point of interest. It doesn't necessarily have to be an up candle. Anywhere where price stalled is where money was collected. So that or this candle, it's one of those. It's gonna come to one of those. So there, or roughly, and thank you, sir. So look for it to break those highs, and so everyone's looking for this setup. Everyone is. It's because we all trade the same way, but you still mark it as a point of interest, going through so hard. I mean, the way I look at it is like There's no right way or wrong way to do anything in trading, especially. Whatever makes sense to you and works for you. Everyone sees it differently. Even people that trade smart money trade it differently. Some people use the limits. Some people, do the imbalance. Some people do the up candle. Some people do. I like to just wait for it to go to the pocket of money and then just look to see what happens in the zone. No, we're not entering. We're basically looking to see what price does in those areas. And then it gives us the confirmation. We can catch a 10 pip stop loss, 5 pip stop loss, go instant profit, take a partial, and then it either goes all the way, makes the whole move, or it comes back and we just look for a re-entry. Yeah. Because especially when you're trying to flip an account, you can't just enter. You have to have a perfect entry. You have to have a perfect entry or head stop loss. Yeah, but and then on the flip end of things, there's also this zone. This would be the target right here. So 3150 most likely. So we're looking at probably a 200 pip move here as a final target. This you can, and then there, guys. This week there is some news, but next week there's so much news. It's almost unbelievable. There's U.S. news in the morning every single day. It looks like. Yeah, every day this week there's USD other than Friday, or no, Friday's. Oh yeah, there's news every morning this week. So look out for that. And then next week, first week of September, really look out for this. We got odd retail sales, odd cash rate, odd GDP, CAD trade balance, CAD rate statement, ADP non-farm, crude oil. For some reason, crude oil is on a Wednesday or on a Thursday that day. For some reason, I don't know why. And then Friday, of course, CAD unemployment and NFP. Oh, I went too far. Friday, of course, CAD unemployment. NFP. I haven't really marked up too much though. But yeah, I mean, as far as flipping the accounts, you got to do the math and you got to be really patient. Be really patient.